venture creation and business expansion panel. This will be moderated by Mr. Brian Burt. Brian is a partner and chair of the Emerging Business Group at Snell Wilmer, the largest law firm in Southwest. He is a business lawyer, advising entrepreneurs and emerging growth companies in all stages of development, from formation to liquidity. Brian is a former entrepreneur, having previously founded, raised capital for, and run his own company. Brian earned his Juris Doctorate from Harvard Law School. Brian.
All right, folks, we're going to jump right into it. I'm going to do some introductions, and then we're going to talk about venture creation and business expansion. So first up, Anthony Bajoris is the founder of CXO Advisors and Management that provides venture creation and advisory services to early-stage technology companies, leveraging 20-plus years of experience as an executive, investor, and entrepreneur with multiple exits. Next up, we have Zach Ferris, CEO of Coplex, a startup accelerator that works with non-coding subject matter expert founding teams to start software companies. He's also a founding partner at Coplex Ventures, the VC arm of Coplex, and a contributor for Entrepreneur Magazine. Zach holds a bachelor's degree in computer science from Ohio Northern University with a minor in mathematics and entrepreneurship. Next up, Greg Head. Greg's a 30-year veteran in the software business who has helped grow 3 startups into global brands, 2 of which exceeded $100 million, SalesLogic and Infusionsoft with 1 IPO. Greg has advised hundreds of startup founders, small business owners, and CEOs to help grow them faster by turning their early-stage businesses into sales and marketing engines. And last but not least, Ibrahim Mesbah is the co-founder and CEO of Revolution Parts, a leading SaaS e-commerce provider for the automotive parts industry. Prior to Revolution Parts, he led the finance products engineering teams at PayPal. He holds a master's degree in computer science from Arizona State University. So we're going to kind of break this into 2 parts. First part, venture creation, and we're going to talk about that, and then business expansion. So Anthony gets the first question. What's the difference between venture creation and entrepreneurship?
Well, I'll give you my definition. I don't know if this is the universally accepted definition, but I think they're actually very similar. There's really 2 core functions of entrepreneurship, which is starting the business or creating the business and financing it. As businesses get more complex at the early stage, that works for some simple businesses, a lot of software businesses. You have founders that are technical that can found it by themselves or with a co-founder. But when you get into more advanced technologies, it becomes a little more difficult to bring together the skill set and take the financial risk for those. So the venture creation model really deconstructs some of those 2 components, really separates or creates a structure for separating the financial risk from actually starting the business. And so one way to think of it simply might be like entrepreneurship for hire or outsourced entrepreneurship. At least that's the way I view it.
All right, thank you. So a lot of folks interested in starting tech-type companies but may not have the technical background. So Zach, tell us about what one might do to start a business if they're interested but don't have that expertise.
Sure. So the business of today tends to be a technology business across pretty much every vertical. If you're not creating a tech-enabled company or some kind of company that's really leveraging technology and what it has to offer, then there's a good chance it might not be a growth company that you're actually starting. So the future of the company in general is going to be a software company. The problem is, you guys have heard this as well, but there's a shortage of talent and technology talent to actually help start some of these companies. And for first-time software company founders, even if they're experienced executives, a lot of times we see them struggle with this idea of figuring out where to start. Do I go and hire a software development shop? Do I go and try to find a technical co-founder? Do I go and hire 5 or 6 engineers? So we see a lot of our founders struggle with this, and it is something that can be solved. There's a lot of ways to solve the problem. I think there's certainly different options that you can take to solve for it, but it is typically important to make sure from the start that you're considering that foundational component when you're launching your new ventures.
All right, thank you. So Greg, what do you see as the biggest challenges that startups face based on all the discussions you've had with founders and CEOs over the years?
Well, there's a lot of challenges that founders face and entrepreneurs to get a business going, whether they think it's going to be a growth venture or it just needs to be a small business that can support themselves and the team. And that's one of the advantages that veterans have over everybody else starting business. They're used to doing hard things. They're used to being on a mission. They're used to being with teams. The biggest challenge in the getting a business up and running is there's two sides of it, but pretty quickly entrepreneurs realize that finding customers that have a serious problem that they can solve, that they can reach, that they can sell, that they can serve, is actually the harder part of the problem. In the service business, we show up and we can provide service. In the product business, it's still difficult, but it's easier to create technology and other products. So most of these businesses have enough product or service to sell, and the real challenge and the real reason why businesses don't grow up and grow or survive is because they haven't turned into sales and marketing machines, right? And in the early days, you're out there making it up, trying to make payroll, seeing where the world is, and it's kind of an ADD mode, which is the game. To find, putting the key in the lock and see if they like that, and you could sell that, and that price works, and versus the competition. So pretty quickly you realize it's about getting towards a sustainable, repeatable, revenue-producing business, not just building a product or having the service.
So I came to Phoenix about 14 years ago. A lot of people in the startup world talked about how they could break out of Phoenix, maybe head to Silicon Valley. When can that happen in the life cycle? These days you hear a lot more folks who are interested in making Phoenix their permanent home in a kind of an effort to see what we can do to grow the ecosystem here. So Ibrahim, what's it like to build a technology company here in Arizona and keep it local?
It's actually great. So we run a software company that caters to the automotive dealerships or the automotive industry. We help them sell parts online, and so we've been doing this for about 4.5 years, and I've been really amazed at how much support there is in the community in terms of, I think Greg over here, for example, has assembled a list of over 300 companies. And it's always great to see how that list keeps growing, but a lot of those are founders, maybe on their second or third company, and it's amazing how open they are to kind of mentoring and sharing their experience. There's also a lot of events like Venture Madness and the Arizona Commerce Authority's Innovation Challenge. So we were really lucky to win a $250,000 grant in our just second year in business, non-dilutive, and it came at kind of a critical timing that helped us really grow. Just talking to some of my friends in the Bay Area, one big factor is affordability. So growing a company here in Arizona versus the Bay Area, very different. So from what I've seen in the Bay Area, you have to typically raise $3 to $5 million for every $1 million in revenue, just because things are just really hyper expensive there, right, compared to how things are here. So I think there's a lot of resources. There's a lot, there's Galvanize, Coplex, and other companies that are here to really support entrepreneurs. I think the community has evolved a lot over the last 4 years. And honestly, I feel that we're very lucky to be here in Arizona and start a technology company.
That's great. So here in Arizona, you can afford to both have a house and feed the kids as you grow the startup. So going back to Anthony, tell us, in your opinion, who hires these venture creators?
Well, I can give you some examples of a few of the people I've encountered. Believe it or not everybody with an idea actually wants to create the business or start a business, right? And occasionally I'll encounter folks that actually have an idea in capital. They're investors. They've recognized a market need or an opportunity or believe they have, and they actually want to test it. They might have the skills and the experience to do it, but they might not have the time or the interest in actually building the business because it's a lot of work. So that's one group. Another group that we're getting an increasing amount of engagement from are actually corporate partners. typically those that are employing an open innovation strategy. So the less internal R&D they're doing, the more external mergers and acquisitions they're doing. And so they're looking to be involved and sort of partner outside of the organization with groups in early stage ventures. Sometimes, again, they may have those same factors where they may recognize the market opportunity and they may have the capital, they may have some of the talent, but they may not have all the pieces. They may not want to own it or own a part of it or all of it, or they may just want to share the risk because it's so early stage and so high risk.
So we're going to go to Zach with one more question on the venture creation side. Then we're going to talk about how to expand those businesses once they're up and running. So, Zach, talk about raising money. I know we've only got a couple minutes here. Could probably talk for hours on the topic. It's obviously a big one when you're getting started. Not everyone's got $1 million in the bank from a previous venture to kind of make it happen. So talk to us about kind of some key tips for those in the kind of concept stage, early stage.
Yeah, so I think Greg hit on a really interesting point earlier. He said that it's a lot easier than ever to start a technology company because a lot of the tools and platforms that exist today. So back in the early 2000s, to start a software company, you had to go raise a couple $1 million at the idea stage just to be able to get started. And things have changed a lot since then. So there's people starting companies now. You're somewhere in the range of $50,000, $100,000. People are actually starting new software companies. And if you're technical, there's actually ways you can start it without putting in any capital. Just put in the time and crank out the code and get something to market. And there's even new tools and platforms emerging, something called Good Barber, and all these little platforms that actually let you build an app even if you can't write any code at all yourself. So there's a lot of these really interesting tools and things that are happening that are reducing both the time and cost it takes to bring a new software company to market. So the fundraising journey, I think a lot of people have almost over-romanticized the whole thing. It's actually really not that fun to raise money, and every time you raise money, you're diluting your equity. So it's a very expensive way to get cash in the bank to build your company. So people, if you go to someone and say, hey, do you want to take out a loan and personally guarantee it, they cringe and they go, ugh. And then when you go to them and say, do you want to go raise some equity and get an investor to give you a check for part of the company, they get all excited. Well, really, they're kind of the same thing. If anything, the debt might actually be cheaper if what you're building is actually successful. So I run into this every day. It's a little bit over-romanticized, this whole raising money. And I think when I started my first company, it was during the Great Recession, and there was very little talk. It wasn't sexy to raise money. It wasn't even possible to raise money in many cases, especially in rural Ohio where I grew up. But it was the cool, sexy thing to do was called bootstrapping. And for whatever reason, that kind of died off because of the dry powder in the economy and the capital markets and the hype around venture capital. But I actually do think that can also be a really good way to build a company.
Let's go next to Greg and kind of continue on that theme. Obviously, once you're through the startup phase, and we're going to talk kind of in the second half of the panel about business expansion, big difference between starting a company and growing it. A lot of people think it's just kind of one fluid process. Clearly not. And let's talk a little bit more about the funding process. So what would be a kind of the key tip or challenge for someone who's gotten past the startup phase or looking for growth, and now maybe they're going out for a different type of investor, a different type of partner to help fund, and typically larger dollars, to hit that second, third, fourth round?
Well, raising funding as you grow a business. Every business and every entrepreneur needs help, and they could always use more money to fund their growth. They could always use more members of the team. So it's kind of an expected game to say, I've got a big vision, and of course I'll raise money to achieve that vision. From the other side, the people that invest in these companies, you'll hear more about that in the next panel, see hundreds of companies, most of which are not really fundable. So there's kind of a difference of opinion that's happening there, and it's always hard. And even the ones that get funding don't always make it. So getting through if you're lucky enough to have an idea and get something built and start getting customers and build a little team and get that going to start to prove something in the world, that's a very different phase of saying a promise to an investor. You invest this money, we'll spend it, we'll create a bigger company, it will be worth more, and we'll pay you back, right? And that phase of growth from, say, $500,000 or $1 million to 10 million, where you're a more valuable company, or 100 million, there's actually, you know, the business kind of gets transformed. You go from the ADD mode of the early stage to, I don't know what you call it, the OCD focused mode that all of us have been through, right, when you start. Even this event is going through, let's try things, and next year it'll be more focused and more focused. So investors want to hear about that focus.
Next year?
What's that?
Are you saying we won't be here next year?
No, it's we got to learn lessons and make it better. That's every business is going through that. So investors want to hear you've tried things, you've figured it out, now you know the answer, and you're not doing everything.
Ibrahim, another trend I've seen is folks not wanting to take capital, and bootstrapping was mentioned a couple minutes ago. And I've got a number of clients I work with who really that's the goal, to get as far and maybe even through the life cycle, kind of doing it on their own. There's been some local examples of folks who have not taken any money. You've had a lot of exciting growth over the last 4 years, so why haven't you raised funds yet?
So, I mean, it's, you know, to be completely candid, one reason is, you know, this is our first time, it was my first time starting and running a business. And I never quite understood what the expectations are when you put money behind sales and marketing. So essentially, I mean, just like Zach mentioned, it is really easy to start a software company just in terms of the upfront investment that you have to make to get something going. So that's essentially, that was our approach. Let's, you know, put time aside, we'll dedicate a lot of time and effort, spin up a service, right? Work with the customers, experiment, try to find product market fit, and we were completely hyper-focused on that. We needed a lot of capital to get there, right? And then as soon as we started seeing traction, revenue started coming in. We were sort of, you know, it's been a great learning experience, you know, going through the last 4 years, but we're able to build the company over the last 4 years, and every year we'd pause and say, is it time to take money, or, you know, you could either go the equity route or the debt route. So we did go the debt route in terms of smaller lines of credit and friends and family loans. So now that we're at $5 million in revenue, now we're looking at it a little bit differently. Now the goal is, well, how do we get to $15 million, right? Do I need to raise money today? Probably not, but it's going to take me a lot longer to get there. So now that we have this machine, it makes sense to secure funds and really put gas behind it and get there. I'd love to get there within a year, for example, right? So I think it comes down to kind of a personal choice, the type of business or market you're in. There's a lot of other factors, but one interesting thing that I've noticed when I talk to some of the other founders of companies here in the Valley, you'll typically, I start to see a trend that, you know, first-time founders, especially if it's a software company and you have an engineering background, tend to be more conservative initially as they're trying to figure it out. Tend to be, you know, to bootstrap and want to really solidify, feel really good about the product or the foundation before they really go for it. And then other companies that are kind of, you know, you can see it's either a founder that's done it before or somebody that's got more of a sales and marketing background. You see them really go for it, you know, and might not necessarily have the product side all figured out. You know, if I'm fortunate enough to kind of do this again, you know, be successful here and start another business, I'll probably raise money because I'm looking at this now and saying I could have probably shaved a year or so off. So that was our experience at least.
Each an individual experience and expectation. Anthony, so talk about your business is up and running, but you've kind of plateaued now, and we've talked about obviously the fundraising for a few minutes, but what other things might one think about doing when you get to that point?
Yeah, well, this is, so I've founded several businesses. I've worked with a number of other early stage companies, also from startup to the incubation stage to that growth stage where they have you know, $5-10 million or more in revenue, and they're trying to hit the gas pedal and go, and they can afford to do it. So let's say capital isn't the problem. One of the challenges that I faced in some of my earliest ventures and that I see other founders really struggle with, I call it founderitis, but it's really, it's sort of this interesting thing, right? To be a founder, at least my experience has been, is that you really have to be a control freak, right? Which works really well. You have to do everything and be involved in everything. You have to be capable of doing it and want to do it in this early stage. And then at some point, you're expected to turn into someone completely different. right? And let go of the reins and empower people and delegate and know how to do that, how to hand the baton off to them. And this is a really challenging thing to do. And where I see it happen is usually around between about 5 and 20 people. It usually seems to be and that's a pretty broad limit, but if you want a narrow range, I'll say between 10 and 20. But somewhere in there, it really becomes difficult for founders to figure out how to bring other people in, right? And it's interesting because I see some of the companies I work with try to pull people from Fortune 500 companies and recognizable companies because they think they have this great background and this great resume, and they plug them in and it blows up because the business just isn't there yet. And so it's a really unique challenge actually to find the workforce for that early stage. And I think that this is part of the real opportunity here for veterans, because at that stage, I think part of what's really important in finding the right workforce is certainly the raw talent, organizational skill, work ethic, and really a passion for what you're doing. It's not necessarily your experience. It's not necessarily have you done this job for the past 5 years somewhere else, right? And so to me, those represent opportunities on both sides, right? Opportunities for veterans potentially to have an impact and join those early stage ventures, and also for the early stage ventures to really get through where that point where they struggle at, where most of them plateau and just stay there or decline and die.
Zach, talk to us about how you know when you're being disrupted by startups.
Yeah, so this is back to the conversation earlier about every company should be a tech company. It's become almost the norm. It doesn't matter. We're seeing companies from the most archaic industries, agriculture. We're working with a few in the medical technology space. We're working with one in mining right now. So we've got a full range of these even more traditional verticals that are tech first and tech enabled companies. And we're seeing a lot of the founders that we work with, they're business executives that have run more traditional companies in the past, and they're trying to get into the technology game. And they're all crying for help right now because they're seeing their market share get gobbled up. There's a really cool infographic that showed the Wells Fargo homepage, or no, I think it was Chase. They showed the Chase homepage. And every single piece of text on the whole homepage of chase.com, it had a little arrow drawing from it, and it had all the startups that are gobbling up that particular product offering that Chase offers. And the rate of growth of all of these little startup companies that are, they're going out raising money, and the rate of growth is not anything that Chase Bank can ignore. When they come in and see these little startups gobbling up market share from all of these different areas, they're eating away their business and eating away their margins. So it's if you're in an industry, a more traditional industry, and you're seeing your margins your margins going down, your revenue going down, and you're seeing all these new players showing up in the space that are tech enabled, you need to keep an eye on that space, because that is the future of every company, in my opinion.
So Greg, everyone's aware of the unfortunate statistics in terms of most startups will not make it. You've got, some talk about maybe a 10% rate at best. But I think people don't realize it's equally difficult once you're up and running, you've been around for a couple of years, and now you're looking to take it to that next level. Anthony talked a little bit about what happened when you plateau, but based on everything you've seen, what are the biggest challenges that companies face when they try to make it through that next stage? They're no longer a startup, but they've got equal, if not greater, number of challenges to keep growing.
Yeah, the growth stages are also difficult, and you can hear from the Silicon Valley big disruptors that say, gosh, it was really hard when we, lived in one room and coded for a year, and now we're bigger, and it's still wickedly hard. It's just different, and there's more people. There's more competition. Those phases of growth change, whether it's how you manage your team or how you go to market. And one of the biggest changes that early stage companies experience when they try to scale up is, in the beginning, you knew your first customers. You call them yourself. Now you have to have sales teams. And to make a repeatable process that the founder isn't involved with, to acquire customers, to get the attention, to convert them, to serve them, and to make them happy, is just a way different game. And it's way harder than people imagine. And just like Anthony said, it's a different sport. You actually have to stop playing the sport where this founder gets in and says yes to everything. We can do that. And it's literally the sport of no. No, you're not a right customer. No, we don't do that. We're just focused on that. It's part of the fanatical focus that's required is to make something that can be repeatable. And just like the food industry, everybody's enamored by making cool food and TV shows. To make a restaurant is way different. The chef isn't there every day saying, what do you want? I'll do that. It's one thing for one crowd in one place every day with mere mortals that can create an amazing product. That's just way different. And that's kind of the magic trick of turning something up. And that's where investors want to get involved when they see that starting to turn. Investors also like to invest in companies that don't actually need the money too. So that shows that they've proven how to do that. That's part of the magic trick.
I thought that's all they wanted to invest in.
If you could prove you've got something going that's repeatable, that isn't the founders, selling to the founders' friends and the magic tricks of the entrepreneur, that's proof that the water is starting to flow.
So Abraham, speak to what's attributed to your success, and obviously I'd assume you're kind of in the expansion mode there, growth mode. What's been your key so far, and what are a couple of challenges that you face in the next 2, 3, 4 years?
Just like I mentioned earlier, I think some of the keys to our success were, I really believe just having the supportive ecosystem here in the Valley. I mean, that was huge. Especially as first-time founders, right? But I think the main thing would be the focus and discipline that we had, and not really chasing after every opportunity. So we're in a very vertical market. So the good news there is I know there's exactly 16,783 dealerships in the country. So it's pretty easy to build a database of every one of our potential customers, and really strategize in terms of which customers we're gonna, who are those early adopters that we can collaborate with as we're trying to achieve product market fit, right? So that was essentially our model. We started with a dealership here in Phoenix and then started looking at other dealerships. We decided to go for some of the larger ones because they were more open to change, risk takers, and more progressive, and are able to give us very quick feedback. So when you look at the entire parts or auto parts industry, I mean, it's pretty big, but we really narrowed our focus down to this vertical. It's genuine auto parts sold by a dealership online to an end consumer. And that focus, I think, was really key to really our success. And I see a lot of companies doing that, right? Focus, grow, and then potentially expand, right?
Well, I think we've got time for one more round of questions, so I'm going to ask you each the same one. Obviously, we're here today and this week trying to celebrate veterans and veteran-owned businesses. Take a couple of minutes each to talk about what couple of key tips, 1 or 2 key tips that you would give to veterans who are looking to either start their own company, maybe join one of these startups that are here in Phoenix. What tips would you give them as to where to find it and how to navigate that process? Start with you.
Me first?
Yep.
I'd say go to Greg's List.
Greg's List.
Am I stealing Greg's pitch? There are a couple of resources. Actually, one of the really good ones I saw recently was Mario Martinez's website. There's a lot of great resources on there directing founders and entrepreneurs. There are a number, I think we're at like 70 or something incubators and accelerators in the Valley. One of the ones that we work closely with is CEI, the Center for Entrepreneurial Innovation. If you're looking if you're looking for startup resources, you can go there. If you're looking for startups to join and support, those are definitely good resources to look for, to contact, because they'll know, they'll have access to a lot of those early stage companies, know who's looking for talent.
Okay. Zach?
So I wanted to mention a couple things really relative to veterans and startups first, and then I'll explain a couple resources that you guys might have here in town. So first off, I think one of the most important words that defines an entrepreneur, a successful entrepreneur, is tenacity. And where better to find someone that has tenacity than a veteran? Because you're moving into a highly uncertain environment with a lot of risk, a lot of unknowns, and you basically have to play a game, and you have to build teams and struggle and learn things and fail and fall on your face and get up and keep going and fall on your face again and get up and keep going. That's the game of
Oh boy, that sounds
stage.
like fun.
that is the game of early stage entrepreneurship.
Where do I sign up?
But one of my favorite books ever, I wanted to mention this too, one of my favorite books relative to specifically growing a company was written by Stanley McChrystal. It's a book called Team of Teams. He's a veteran himself, and it's one of the most incredible books that talks about how to build organizational culture. So I wanted to mention that as well. But I think there's a lot of great opportunities and a lot of reasons why veterans should be not only starting companies, but starting tech companies. So a couple resources here in the Valley. Definitely check out yesphx.com. It's sort of the umbrella, nobody owns it. It's a community-supported initiative that brings together all of the things entrepreneurship happening here in Phoenix, which there's a lot. And definitely, I would say, check out techaz.org. It's an online publication that covers entrepreneurial activities and events happening in town and highlights some of the CEOs from the earliest stage companies all the way to some of the growth companies here in town. But definitely get involved. There's a lot of really amazing things happening here in town.
So Greg, Greg's list is a key place to go. Tell us more about that.
It's just a list I publish of Arizona software companies. So there's over 300 software companies based here in Arizona, and I just keep track of that and show people there's a lot going on. There's 20,000 people employed in software companies here. And this isn't employed in technology and other companies where technology is making it into every company. These are commercial companies that sell software. And so there is more going on here than anybody knew, including myself, and it's growing fast, and as companies grow up, you know, our ecosystem continues to evolve. So, you know, there's a lot of little companies on the list that aren't going to make it to 5 million in revenues. And one of the biggest challenges is they may have a thing to sell. I've got a cool idea, I've got a cool service, I can do this. They're not finding customers that seriously have the problem or have a problem, and really solving that in a magic way for them. And that's the recommendation I would have as you go through your venture, is make sure that you're laser focused for looking for somebody that has an absolutely serious problem that they'll pay money for, change their habits for. Once you've found that, you know, so it's not a product looking for a customer, it's a customer looking for a solution. Once you've found that, in Phoenix, just like Ibrahim mentioned, there are a lot of people who have in that industry or have been through it that you can reach out directly to. There isn't one place you could go to where all the people are and you can they're all lined up and you can talk to them and so forth. You can do it yourself, and we've all done that, and we're part of that. So once you've found that problem and customer, go find people like that. And there's all kinds of people that can help this business, but he says, I'm just looking for the ones now who have auto industry experience, right? And that's a pretty small community in the world of those in the parts world, for example. And that's a massive problem for dealerships. How many parts does a dealership have to deal with, part numbers?
About almost 500,000.
500,000, right.
So close us out, Ibrahim, telling us about what your tips would be for the veterans out there today.
Yeah, I mean, I think just to add on top, on top of what everybody just said, there's a tremendous amount of resources, but, my recommendation would be to find a small to mid-sized business or a startup. I think you have a better chance at kind of connecting with some of the decision makers. Go to some of these events, try to find a business or two or three that kind of you can connect with in terms of where they're going and their vision, and kind of personalize it so that you stand out. So I think it's still a pretty small valley in terms of finding somebody that might be connected to somebody that knows somebody at that place. And yeah, I mean, we definitely look at, you can see when, you get a lot of applications, candidates that really stand out, that you could say that they've taken the time to really learn about the business. They're passionate about, you can tell what they're passionate about, and it's personalized, so they'll definitely get a call or a conversation back. And then one thing, just talking to a lot of people in the Valley and founders and CEOs, I mean, everybody's hiring, so it is hard to find good talent, so.
Brian, can I add one more thing? Because I had to go first, so I didn't really get to think about my answer. There's one group that that's a great resource, which are some of the local economic development groups. Some of them are sponsors of this, right? Paul, the Arizona Commerce Authority, they have resources. Another local group is the Partnership for Economic Innovation, and I know that they're launching a project called Pipeline AZs soon, which will actually really help, particularly veterans, connect their skills to open job opportunities across the county, the entire county. And another one is the Arizona Collaboratory. And actually, that's, in full disclosure, I'm actually one of the board members, so this is a bit of a pitch, but I'm a board member because I believe in what they're doing, which includes actually connecting labor or workforce talent and capital with some of those early stage ventures. So that's actually another resource that folks can actually go register, and they'll help make that connection.
Sure. Well, it's a pleasure to be here today. I want to thank my panelists for their participation and excellent advice. Clearly, I think one thing we can all agree on, it's a great time to be an entrepreneur here in Phoenix. So please take advantage of the opportunities and resources to make something happen in 2018.
On behalf of HeroZona, I'd like to thank all of our panelists. Brian, thank you for moderating. Anthony, Zach, Greg, Ibrahim, thank you for your time.